Everyone, this is Robert Keats with goldsilverpros.com, and I have a very interesting guest on the show today. His name is Logan Kane, who's the author of 2 books, High Finance and High Rollers, and also a very popular Seeking Alpha contributor. Logan, how are you doing today?
I'm good, Rob. How you doing?
Doing very well. Thank you for joining the program. Now, you and I were chatting just before the podcast, and I think congratulations are in order because I understand that you've recently graduated. Can you tell us a little bit about that?
Yeah, thank you. So I guess the first time you and I met was a couple years ago. We went to this really good local restaurant in South Lake called True Fire, and we just we talked some stocks. So at that point, I was just really starting my my writing for Seeking Alpha, and I feel like along the way we've been doing some really interesting research and stuff that a lot of people really don't cover on the markets. And I think that's kind of what's cool about your site too, is you have kind of a different perspective on the market. And it comes from us. I mean, we're in Texas, and a lot of people who analyze the stock market, they're in New York City, they might be in Chicago, DC. So we have a different perspective on the world than them. And I think that's an advantage for us. My whole approach to the financial markets is to trade against the biases and constraints of both retail and institutional investors.
Yeah.
And I think something interesting we got going on right now is we have a government that's just printing money. Like, I mean, they got all these programs that they're running, and the unemployment, the stimulus checks, and they're just printing the money to pay for it. So I think that what people really need to do is they really need a new approach to making money in the financial markets, and it's not one out of fear or an overly cynical perspective, but we have a kind of a new world, and I think investors who are awake to that fact, I think they're going to do very well.
Yeah, it almost seems like it's the end of the value investor, and I don't know if that's forever, but a lot of the fundamentals that I've typically written on and that people, Peter Lynch and Warren Buffett wrote on, with all the global financialization that's going on, it almost seems like they throw it out the window because every time anything happens, you have the central banks doing monetary policy, and it's kind of like, how do you fight against that? So what's your views on that? Do you think that's eventually going to end, or what do you think is going to be the result of all this Fed stimulus?
Well, I think the most obvious effect of this is a decline in the value of the U.S. dollar against other assets like real estate, like gold, probably Bitcoin, and stocks to some extent. I think people who are owning bonds that are paying very low interest rates, I think they could be in trouble because I think you got basically zero interest rates out to 5 years on the curve. And you have the government printing money. It's like I don't know if it's completely unprecedented in world history, but it's certainly unprecedented for my lifetime. I mean, in 2008, we had this quantitative easing thing, and that was for treasury bonds. And now we have the Fed printing money to buy corporate bonds. So they're literally printing money to buy the bonds of like cruise companies, of airlines, automakers, and it's literally the U.S. Treasury is just propping these companies up, and ultimately it's us. So I think just it pays to be smart about what you're doing in the financial markets, and a lot of people, they don't do the math and they just say, hey, this is the old way of doing it and it's going to work, right? But I think it really does pay to like look behind the scenes and say, hey, does this pencil? Like let's do the math on this and let's see if this makes any sense,
Yeah. One of the things I love about your articles is you approach the stock market different than I would say most traditional investors do. You really have a data analytics approach and a data central approach. And a recent article you wrote for Seeking Alpha is called "Why Nighttime is the Right Time for the Smart Money in Stocks." And you were talking about the correlation of gains in the stock market when the market's closed and how it almost becomes sort of a poker game during the day. Can you elaborate on your research there? And
Yeah, for sure. So basically, in my lifetime, my biggest moneymaker has been trading in my personal account and trading for a select group of individuals who I partner with. And what we've done is the first strategy I really discovered was we would buy stocks in momentum. So that would mean we would buy stuff that's going up. And then we would basically try to buy high and sell higher. And it sounds really counterintuitive, but it really does work. And there's reasons why this is, from something called the disposition effect. There's post earnings announcement drift. There's a lot of reasons why stocks have momentum. Basically, basically all of these price anomalies cause the price of securities to lag the company fundamentals. But what's kind of interesting in this article that I just did, and it really came out of a struggle I had trading last week. So I bought shares in NVIDIA, right? Actually, I bought some options in NVIDIA, and I was frustrated because it was going up every day overnight, and it was going down, and it was going down during the actual trading day. So I looked into this, and I found this New York Times article from a couple years ago, and then it really just clicked. Like, I realized that there's a lot of investors out there who borrow money from their brokers. Both institutional and retail investors do this, but they borrow money from their brokers and they buy stocks in the morning and then they sell them back in the afternoon. It's day trading. When you have all of these investors going in the same direction, it actually has an effect on asset prices. And the net result here is that all of the gains for the stock market happen when the market isn't open. So it's basically from the close of the market to the open the next day is when all the gains happen. And then during the actual trading session, it's a complete wash. So I thought that was pretty interesting.
Yeah. Do you hold primarily long term or do you trade? And that research, does it affect the way that you trade?
It absolutely affects the way that I trade. So basically, with these momentum stocks that I like to buy, I kind of am learning to ignore some of the daily fluctuations in the stocks and look more out like over like a 5 to 10 trading day period. Look at the momentum for that. To answer your question on whether I trade short term or long term, I do both, and I do them in separate accounts because I don't want to poison my long term account with like my short term trades. Now, I would really recommend that for people to separate their accounts, so you can have like a long term account. Maybe it's in Vanguard, maybe it's in like just at another broker, and so you have your long term picks in there, and then you do your trading in another account, and then you run them separately, and that really allows you to track the performance of your trading more accurately. Allows you to run strategies under different time frames. Like an example right now is you might think that stocks are a little too high right now, but long term you think they're going up. So you can kind of trade on these two different time frames. You can be long for the long term, and then you can be short certain stocks in the short term, and you could make money on both if you do it right.
Yeah. Do you do a lot of charting and technical analysis when you trade? Because one thing I've noticed is I'll look at a chart and something long term will stand out to me, but something short term will stand out and it'll look completely different. And then I have to make the decision: how long do I want to stay in this, and what direction do I want to go?
So I only use technical analysis to the extent that it confirms known anomalies in the prices of stocks. So what you see with a lot of people doing with technical analysis is they'll draw a bunch of lines. They're like, this is a backwards head and shoulder, or they have all these silly names for all these chart patterns. I don't look at any of that. But there are several well-known like price anomalies in stocks. Like the primary one is momentum over basically momentum over basically a 1 day to a 1 year time frame. Basically, winners keep winning. And another one that kind of trips people up is there's actually some mean reversion that happens sometimes in stocks and ETFs. So like if a stock gets hit with a liquidity shock, like if a large investor dumps the position, you can see some mean reversion. So like if a small cap stock is down 20% for no reason, that's more likely liquidity driven than fundamental driven. If a stock's going up like a few percent, like 1 to 2% every day for like a week, then that's more likely to be momentum driven. Does that make sense? Because a lot of people, they really take this technical analysis thing to the extreme. And I basically just use technical analysis, very basic, just to identify underlying price anomalies that are known and have been researched. And a lot of technical indicators actually they're actually directly related to those. Like the classic strategy of trading on moving averages, that's actually a momentum indicator.
You wrote another article recently about your top pick being PayPal for 2020. Can you explain why you're so bullish on them?
Yeah, so I'm long some PayPal stock, and honestly, so I wrote this article because I feel like PayPal is just going to be a new economy winner, and I see all of these businesses that used to use checks, they used to have all these inefficient ways of transacting, and now I see, and with PayPal's last quarter, they reported earnings about 2 weeks ago, and they set a record for transactions for both PayPal and Venmo. So you have all these businesses who are finding more efficient ways to pay each other. And what I think, and I could be wrong here, but I don't think they're going to go back to paper checks. I don't think there's any reason to. I think that a lot of what the coronavirus has done is it's accelerated pre-existing trends. So to the extent that a lot of this technology is used, I think it's game over for a lot of the old ways of doing business.
Yeah, I kind of agree with you, and I would throw in a demographic shift there as you have a lot of the older baby boomers starting to retire. They're not buying as much in the marketplace, so the need for them to use those older payment methods, I think, is going away. And I think you see the newer generations coming on, wanting to use Venmo, PayPal, cryptocurrency, things like that. Do you think PayPal is a stepping stone to more electronic money like crypto, or what are your thoughts on crypto in general?
So me and crypto have an interesting relationship. So I was very negative on crypto for a while. Like during 2017, I was down in Florida for a Tony Robbins event down in Florida, and everybody was talking about crypto. And I said, Bitcoin was like close to 20,000 at the time. And I was like, I don't see the value in it right now. And prior to that, I knew some kids back when I was in high school. I think it was like 2013, 2014. And they were into crypto very early. Like there was this redheaded kid, and he was really into like these psychedelic drugs and stuff, and he was talking about this Bitcoin thing. And I think he's a millionaire, but I don't know where he is now.
Yeah.
So that he was using it. So there were some very early adopters who really saw the potential in this Bitcoin. And I don't know I know there's other cryptocurrencies, just like there's other precious metals other than gold. I think Bitcoin is likely to be the market leader. And I could be wrong with that, but I just don't see anything else like pushing it out of its place now that it's established. But long story short, like a lot of dumb people got into cryptocurrency just based off of the momentum. And those people got flushed out. So Bitcoin was down, I don't know, 75, 80%, 2017, 2019 maybe. And now I think the long-term value is pretty well aligned with the people who own Bitcoin. So it's not necessarily like a game of hot potato anymore. And now honestly, I am increasingly warming up to cryptocurrency because it's very volatile. So the annualized volatility of gold is about the same as the stock market. It's 15 to 20%, I believe. It might be a little less. The annualized volatility of Bitcoin is like 3 to 4 times the stock market. So it's very volatile. But with that in mind, right, the value of the US dollar is guaranteed to go down in the long run. It's literally guaranteed. And the Fed has a 2% inflation target, which is probably going to, I think they play with the inflation numbers because what I would look at is just the cost of housing and healthcare rather than, I mean, I know like it's easier for people to buy food and stuff than it was 50 years ago, but we have so many people who are millennials and who are in Gen Z who are spending all their money on housing. So that's the inflation rate that matters for that demographic. I mean, if you're retired and you own your home, right, the inflation rate's not so bad. But if you are continually getting priced out of being able to afford a middle-class house for you and your family, even when you're making high 5 figures a year and went to college and get married, I think that's trouble for society. And I think what I think is that cryptocurrency and gold, and you got to be smart about real estate because there's ways to lose money in real estate. There's ways to make money. But I think those are going to do abnormally well over the next 10 years with all this money printing. I mean, the value of the US dollar probably has to go down 25 to 30%. Just to get the debt under control.
Right.
I mean, it's not going to be like, we're not going to be like pushing our wheelbarrows with cash like down to Central Market in South Lake. But like they're going to have to devalue the currency. They don't have a choice. They borrowed all this money and somebody has to pay. And I think who's going to pay is pension programs, institutional investors, people with long-term assets. And the people who will gain are people who own who own stuff that's not connected to the value of the US dollar,
Mhm.
and people who own things like real estate, gold, and crypto.
Yeah. Yeah, Kenneth Amaduri of Crusher Street and I were talking, I guess it's a week or two ago, we had our interview and we were talking about confidence in the system. And I think we were both of the view that you have to look at both gold, which is sort of the traditional confidence meter, but then you also look at the cryptos. And Bitcoin has started to come back. And what I see over the last 3 years is about a $250 billion market cap in the major cryptos, holding pretty steady. So like you said before, I think they've established their value in the market. And I think if you look at both gold and the cryptos, there are different ways of approaching the same problem, in that people aren't necessarily trusting the system. And I think that you have some older like Gen Xers like me who go the gold route, and then you have some younger millennials who go primarily the crypto route. But I think they're all saying like the same thing. They're all saying we don't necessarily trust this, this fiat system. We don't necessarily trust prices right now. The jobs for the millennials is not really strong right now. I think at one point in the last couple of years is 50% employment rate for college grads, which is just horrible. It's one of the worst rates for the last few generations. So I think people are saying, yeah, we don't necessarily trust this system. But then you also have the older people who grew up in the system who this is all that they know. And so it seems like there's this bifurcation in the market. You have the guys that believe in the traditional stuff, and then you have the guys that believe in the new stuff. And what do you think is going to happen over the next 10 to 20 years as these baby boomers retire? Do you think we're going to get away from not only old payment systems, but old ways of investing, and we're going to be in these new ways of investing? Do you see like a demographic market shift coming?
Well, I look out over the next 10 to 20 years in America, and I think that there's a very real possibility that GDP could grow and standards of living for the average American family could go down, precisely because of all this printing of money and because of the debt that, the senior people in politics and business in our country, they are literally running our institutions into the ground.
Yes.
They're exploiting everything, like over exploiting, doing all kinds of unsustainable stuff, from borrowing too much money. You see this with like out in West Texas, they're draining the aquifer. Like they're going to run it out. And same with a lot of these people who own this oil. They're just, a lot of people who are in power in our country are just not doing stuff that's very sustainable. And I would say printing money is probably at the top of the list of that.
Yeah.
So I don't really know. Like I could see like, I definitely see crypto becoming a bigger thing as time goes on. I don't really foresee a total collapse in the system. I guess kind of what I see ahead for America is a lot like the UK was after World War I. So the UK was the richest country in the world prior to World War I. And now it's about, the GDP per capita is about the same as Mississippi, right? So the poorest state in the United States. So I think that could be the reality for the US. Like I think we could have been, like we're one of the top 5 to 10 wealthiest countries in the world per capita right now. But I mean, in 20 years, are we going to be in 25th? Are we going to be in 30th?
Yeah.
And I really don't know. Like, we might be living in some other Commonwealth country like 20 years from now, like Australia or Canada or something, or maybe Switzerland or somewhere, because the people who run the United States borrowed so much money and they printed so much money that they really undermined the whole system.
Yeah. I want to go to another article you wrote recently. It's talking about corporate America is failing the class of 2020 and it's bad for investors. And you mentioned kind of what I talked about. The graduating class of 2020 will struggle to attain the same standard of living as their parents. So what did your research there tell you about your graduating class?
I can just tell you what's going on with a lot of my friends. So a lot of people were really promised them in by their employers as they graduated college over the last couple of years. And now a lot of those same people are unemployed. And the predominant routes that people are taking is they're either taking their unemployment benefits, the $800 a week, or they're going to graduate school, which is just kind of kicking the can down the road. I think one of the basic problems we have here is that a lot of corporate America is run by consultants, and they're not really interested in growing businesses long term. They're not really interested in balancing the interests of all their stakeholders. They just want to drive the price up of the stock short term. So basically they borrow more money than sustainable. They cut payroll as much as they can to jack up the EBITDA. They buy back a bunch of stock.
Mm-hmm.
And like, it just doesn't work. Like if you have a company that's not growing revenues normally, like you can't like just pile on debt and use it to buy back stock and expect it to like the stock price to skyrocket in the long term.
Mm-hmm.
It works in the short term, like we saw with Boeing, we saw with the airlines, even some of my friends who work for Dell. So in the past 6 months, they announced these huge buyback programs, right?
Mm-hmm.
And now guess what? They're coming back to the capital markets. They're like, hey, we need to sell some stock. Like, what are you guys doing? Like, that's moronic.
Yeah.
Like, it's completely unsustainable. And the only reason that they're doing it is because of the massive conflicts of interest of the people at the top. And all they have to do is they get these stock options, and all they have to do is drive it up short term. And then they're not around. Like, they're not around long enough to see the consequences of their actions, because they're hopping jobs every 3-4 years.
Yeah.
A lot of these senior people, and it just doesn't work. I think you've seen from both the left and the right of some of this criticism of these companies who they buy back all the stock and then they run out of money in the downturn because they over leverage their company, and then they either go to the capital markets with their hat in their hand, or in the case of the airlines, they go to the government.
Mm-hmm.
And that shouldn't happen. Like they should more people should run their companies in ways that, like, if the next 10 years look like the last 10 years, like, will my company survive? And if the answer is no, then they really need to change what they're doing.
Mm-hmm.
You know?
Do you think one of my thoughts is that corporate America's sort of gotten too big for its britches, and I'm wondering if there needs to be a readjustment of expectations downward, less use of debt financing, less use of borrowing from tomorrow, more making unique products like we used to be, kind of going back to the old idea of being a manufacturing or at least an innovative economy. What are your thoughts on what companies would need to do to kind of get back into the right track where they're in a positive growth mode and they're not using debt leverage so much?
Yeah, so I think what's kind of interesting, and I wrote about this in one of my articles, is what's driving GDP growth right now is we have amazing growth in technology.
Mm-hmm.
Just the pace of technological innovation in the United States. This is the reason why our economy is growing.
Mm-hmm.
And a lot of, if you're at a company that is not doing that, then chances are your company is struggling.
Mm-hmm.
I mean, just where we are locally, a lot of the big employers like General Electric, like AT&T,
Mm-hmm.
they've really struggled because they don't really innovate in the same way that some of these big technology companies do. So you have parts of the economy that get it, and I think I know Tesla is a very controversial stock, but Elon Musk is very good at placing the product first and investing in products and investing in innovation, research and development. And look, I mean, you can just look at what the market has rewarded him with. I mean, he's kind of nuts. I mean, I think we all kind of, but he is. Wall Street is rewarding Tesla like crazy for what they're doing.
Mm-hmm.
And if it were an old line like manufacturing company doing this, it would never like they would have been out of business a long time ago. But they're able to innovate, and not that every company needs to become like Tesla, but I think we could do a lot of things to align the interests of employees, of shareholders, of corporate managements, rather than have some of these systems where you have these big conflicts of interest and just super short-term thinking.
So any last thoughts from you on what's going on in the market? Anything else that you happen to be working on that you want to preview here?
Yeah, sure. So I guess I'm mildly positive over stocks over the next 6 to 12 months. I have a fairly constructive view just based on the stimulus happening.
Mm-hmm.
I'm negative on cash right now. I think it really depends on the second wave. Like, in the long run, cash is trash, right? But in the short run, cash is king. Mm-hmm. So getting your portfolio size right and getting your investment worldview right, it has to reflect the push and pull between that. So I would say, just for right now, I would say people want to be pretty conservative with how they're investing, but they don't want to miss out. Like, you don't want to be all cash right now, and you don't want to be all in, like borrowing on margin. Right now we're about, I don't know, probably 75% long for my family portfolio.
Okay. All right. Thank you so much, Logan. I appreciate the conversation. Wish you the best of luck, and maybe we'll touch base again here in the near future.
Thanks, Rob. It's my pleasure.
All right.